So if you have, somewhat lower to moderate credit, if you have, what you might consider a lower income or a working class income, you don't have a big income, you don't have prime credit, you're still looking to actively start stacking up personal and maybe even eventually business funding to basically fuel your entrepreneurial goals, then this video is intended to give you one of the top strategies and focus points for you to optimize your applications when going through underwriting for these various products. So I have 10 years of banking experience, over 10 years of banking experience at this point as a licensed banker. And my day-to-day operation largely entails me taking these applications for various clients of all lending backgrounds and sorts, products, but especially credit cards. I do a lot of credit cards. I have for a while now. And I'm not doing the underwriting, but I'm putting in these applications and often having to work in the data on the applications and work reconciliation if the client isn't immediately approved, but we believe they should have been. I am also on a personal journey myself of acquiring a combined $100,000 in available credit between personal and business credit cards for 2023. 37, almost 40,000 of it has already been acquired between April and June of this year so far. What I've learned in that process professionally and on my personal path is that prime credit is great, a great income is great, strong banking relationships is pivotal, but at the end of the day, one of the most powerful and least spoken about data points you can have as a borrower or an applicant is to have a very, very low DTI. For those of you who aren't completely familiar, DTI is debt to income ratio. That is basically your monthly reported debt load on your credit report in comparison to your gross monthly income. And when I tell you I've seen dozens of times with clients, and I also personally experienced to an extent, where people who may not normally get approved on other factors are able to get approved, and some people who have good approval features or odds or data points in other areas get much larger limits to start when they have this in place. Your DTI is a very powerful, really underrepresented part of getting approved for any lending product. When you're stacking up personal credit cards, business credit cards, you're looking to get as much available credit as possible. A huge determinant factor of getting approved for that is going to be your debt load. Your DTI is going to tell lenders several things, underwriters several things. How are you managing your finances overall is a huge indicator from your DTI. Are you over leveraging yourself? Or are you unstable as far as like your income and stuff like that? How are you able to manage your debt? Having a low DTI is very helpful in that equation. The next thing that you can kind of give off from your DTI that an underwriter is going to pick up is you are able to manage more credit if it's given to you. You have the room, the capacity, you have a credit capacity to take on more. And when lenders can look at that in underwriting and see that you have at least a stable income, even if it isn't that high, and you have a very low DTI, this is going to give lenders more confidence in a time of concern like we're in right now at the time of this recording, when lenders are being very cautious or more and more cautious who they're lending their money out to. Having a great DTI is powerful. And sometimes you can accomplish that and not have the best credit score or not have the highest income. And that's why I wanted to bring this video, is because this is powerful information for anybody with any set of data points, but it can be extremely powerful for some of you who have, moderate credit, moderate income, and you're looking to still stack up personal and business funding options over time, especially credit cards at this particular point in time. So what would be a reasonable DTI? Like, what's a threshold? From my experience, if you can stay somewhere below 30%, it's kind of like credit card utilization. If you can stay somewhere below 30%, you're in a pretty healthy range with your DTI. And the closer to zero you can get, the better. So that basically means the monthly reported expenses that you have on your credit report, hopefully is no more than 30% of your gross monthly income. If you're looking to truly kick the door open on personal and potentially business funding, credit cards in particular, and get really reasonable limits or nice limit increases, then this is the kind of DTI that you want to have. You want something in the proximity of 30% or less of your income going out to other expenses, mortgages, car notes, other credit card debts, personal loans, all of these different things count in your DTI. So I wanted to bring this in because literally this is one of the most underrepresented. If you watch other channels and follow content similar to this, they speak on the data points about what bureau, they talk about, the credit profile, they talk about, how many inquiries, they talk about so many data points. They almost never mention a person's debt to income ratio. There's very little conversation around, they may even mention a person having a high income. They won't talk much about that person's DTI. And I promise you, it's one of the top tangible data points as an applicant that's being observed and can make or break you getting approved or at what level you get approved at. To all my pioneers, welcome back. To my new viewers, welcome in. I want you guys to comment down below, what's your experience in your journey in acquiring more credit? What data points have you observed? Does this DTI thing speak to you? Have you had experience with getting approved or not approved based on your DTI, getting higher limits or not? What has been your experience? Have you seen differently? Have you personally experienced having a very high DTI and still getting approved for monster limits? Let's talk about this in the comment section below. Other than that, I want y'all to stay focused, stay in motion. I'll see y'all soon.
This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.